All right, welcome back from the episode of Carnivore Trades. Today is Tuesday, April 4th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets are trading lower, snapping a 4-day winning streak. You have to go back to 2021 to find a time where the market had 5 in a row, if I'm not mistaken. You have to go all the way back to, I believe it was right in this area here in October to November. But we are snapping that winning streak, and you can see we went right up into this trend line here this morning. Now, we did get, I would say, positive data. It was actually bad news, but right now bad news is good news, remember. So out of the JOLTS number, so that came in colder than expected, and right now the market's, well, at least this morning the market's got a little rally, and that ended up kind of being a sell the news as the market came in. You can see here just those gaps up. A lot of the time, even if news is good for the market, you'll get sellers to come in and say, okay, that's as good as it gets, let's take some profits here. Right now the market's not pricing in, from what I can see, the market's not pricing in the cumulative effect of these rate hikes. And right now we're likely just seeing, just from this jobs data, we had some the PCE data last week. The market loved it, right? I don't think the market's quite pricing in the fact that there's cumulative effect, right? So what I'm saying here is that we're probably just seeing the effects of the first or second 75 basis point hike, and there is 3 or 4 more, including a couple of 25s and a 50. And we're just seeing this kind of happen now. So the market's looking at it and say, okay, inflation's coming in. That's great. But the market doesn't realize just yet there's about to be a lot more coming in, and it's going to be worse than you expect. Right now, so down the road, that's going to be a problem. Right now, we have light volume here. So we're at 56 million shares with 9 minutes to go in the day. There's, bears are already, just on my Twitter timeline, they come back quickly today. They're calling the top here. This is it. Crash tomorrow. I don't see that right now. There's just not a lot of volume. To me, it looks more like profit taking. We did go nicely up into this trend line, beautiful trend line. Tag right there going through the February and August highs. But again, it just doesn't, right now the market doesn't look like, to me, it doesn't look like serious distribution is going on, at least not yet. There are a few yellow flags though. So one of those yellow flags here, I want to take a look at the semis. So the semis are in a little bit of trouble here. Take a look on the intraday. They've been selling all day long. After that gap down, you had a little bounce in the morning with the rest of the market there. And it's been pretty much down all day long here. The transports, DJT, so that has come back below that 139 level, and is back below that previous inside bar low. So that's not a good look here. I mean, can it recover by the end of the week? It absolutely can. And I talked about this as well. It's just not a healthy look here. Up, gap. Look at these gaps here. Not a good setup here for bulls. But still, those are some yellow flags. It's not like it's not broken yet. Another kind of minor yellow flag is if you look at the heat map. And this has kind of just changed in the last, 30 minutes or so, but it's really, look, Amazon here, you got Adobe up, Meta, and then kind of Microsoft, Google, Apple flattish to lower. But if you look at the rest of the heat map, it's, if I lost it there, it's all red here, right? And that's the NASDAQ. Here's the S&P. Comes some defensive names are holding up well. My point is, you're seeing a lot of selling, but 5 stocks are holding the market up, as generally, we've come to expect here with those FANG type names. So that in Tesla taking a pretty good hit today, down 1.5%. But my problem. I'm going to lose my train of thought. The yellow flag here is that it's basically, we're seeing distribution in other names, but we're seeing the market not sell off terribly because of kind of the leadership and the weighting. So I guess hopefully that makes sense. Because generally those big tech names, those big cap names are the last ones to sell off. I mean, look at the Russell 2000, for instance, today. via the IWM here, that's getting pounded. That's down 2%, losing the 20 moving average, and you just wiped out 1, 2, 3 days worth of gains in one day. So that is not a good look there. The KRE also getting hit again. This is a focal point of the market. XLF lower, so fins coming under pressure here. And, if fins aren't going to rally and tech's not going to rally, well, yesterday we had XLE up, and I said that, yesterday the reason the market was up so much is because XLE was up. Now XLE is down 2%, and the market's down. So really, market kind of losing really every sector today except for some big tech names. So hopefully that makes sense here. But in any case, I still think you can put in a higher low. So at least in the short term, that can change. If something changes, I'll be the first to let you know. But right now, market under a little bit of pressure. I think it's just kind of backing and filling. And for bulls, I said this over the last couple of days, you kind of want this action. You don't want it to go straight up because if we go straight up into this double top, we're going to have a very sharp sell, and it's going to wipe out all these support levels. But right now, you want to see some backing and filling for another pop. I still think there's just a little too many bears right now, and I think we have to have one more kind of bull trap before we see some significant selling here. But in any case, SPY pulling back off that trend line here. We'll see what it does tomorrow. Triple Qs here, inside day, and again, nothing terrible, right? So we were red yesterday with the spiders being green. But that's okay. You have a green bar and a 1-2 pullback. There's nothing wrong when you see that, especially on declining volume. So nothing wrong here with the Qs. Again, still a little overbought. They need to work that condition off. If they do that, they can go higher. So just be careful. I know everybody wants to short right now, but just be careful here. I don't see any problems in the market. It's really actually behaving well, all things considered, outside of a few minor yellow flags that we talked about here. The Dow, nice reversal there, down 61 basis points. So basically wiping out yesterday's candle. And it filled that gap. It's holding up. It's still a little overbought. This also needs to do backing and filling. IWM, we obviously talked about that's finding support there at the 175 area. Not a good chart though, below the moving averages again. This weekly is not good, below all four major moving averages, and this monthly is terrible. That's a big bear base there. So again, not a good look there for the Russell, and just tells you the bear market's not over really. So again, just be careful here. We don't have, again, into the spiders here, we don't have trend. So we've been sideways for 6 months. So anything can happen here. But again, until proven otherwise, I think this is just kind of backing and filling right now. Anyways. Let's get over to the semis. Again, we talked about that already, down 1.5. Short term, you've got these moving averages here. Again, I'm watching this big rising wedge, but their underperformance is definitely noteworthy. I never like to see the semis, the transports, and the Russell all, weaker at the same time that the markets are up. So that's generally not a good sign there, but SMH, again, we'll see what it does tomorrow, but down 1.5 here today. IGV has been a strong sector here. That is flat in a down tape, so decent day there, but again, kind of like the triple Qs, big green bar, 1-2 pullback, nothing wrong with that. No problems there. If this consolidates, it can get up to that 310 level and maybe even into 315 or so. For now, it's hanging in there. We'll just leave it at that. Dow transports down 2%. We already talked about that. Hovering right under that 20 moving average. Just not a good candle though. So we lost that breakout bar from Friday, and the transports have been weak now and leading to the downside for the last couple of weeks. That's not a good sign. So again, take a look at the transports. Were last month, in the middle of the month and towards the end of the month, versus where the spiders are. So don't ignore those transports here. They're definitely talking to us. Anyways, let's get over to bonds here. So the 2-year obviously getting a bid today with the soft jobs data. Again, nothing's changed here. I don't see a ton of upside in the near term. If we do get, I think there will be a little bit more upside in bonds here, and there's the 30-year, probably next month, but I don't see a ton of upside. You'll get one probably good surge, and then I think that'll be it for bonds. But for right now, they're holding up, so we'll just leave it at that. Nothing really changing. Over to XHB. This is interesting to me. So housing here today, XHB down 3%. ITB down 1 3/4, and then VNQ here also lower, not a terrible amount here, but that's already had a lot of downside pulled forward. These home builders have been a stubborn bull sector here for a very long time, right? With interest rates surging as much as they have, the market participants are kind of like curious here, like how are the home builders holding up? Today that changed a little bit with that jobs number. Take a look on the intraday here of XHB. Initially you got a little gap up, and then it's just pretty much distribution all day long here. Is this the housing market? Is this are home builders finally starting to realize what's about to happen here? Remember what I said earlier about cumulative rate hikes. If the jobs market's starting to crack, that's going to come into housing, and obviously the next shoe to drop is like I said, cumulative rate hikes, deflation, that type of thing, possibly rapid deflation. Is the housing market starting to sniff that out? It could be, but that's a pretty good outside candle. Again, wiping out the last 3 days worth of action in one day. And you see the spiders here, just that looks like a pullback candle, and you've got an outside, pretty steep outside candle there in XHB. So something to keep an eye on. That could change here, but that's a pretty good down move there for XHB. Market's set to close here. Again, we'll touch on VNQ. So again, just an inside day there, nothing terrible. This has upside to 85 in the near term. That's about it. That's if it consolidates. There's the bell, so markets are closed now. XLF, we already covered a little bit. Back below that 20 moving average. Again, we talked about 32.25 being resistance. That obviously has been the case the last 2 days. Nothing terrible going on there, though. Broker dealer is also in a weak technical position back below the 20 and 200, so now below all four major moving averages. Again, if you lose these pivots, this is going to go down pretty sharply. It's holding up for now, so we'll leave it at that, but that's a pretty good, you have now a bear base here. And you can see it on the weekly. So big down move, beautiful rising wedge breakdown. 1, 2, 3, 4 inside weeks. If this consolidates further, this can go lower. Over to energy here. So crude, again, holding the gains, holding the flat line essentially. I'm curious about this. So the market, for Friday, we have jobs data, non-farm payrolls. Market will be closed, but the futures will be open. So I'm very interested to see how this works out. I'd be wondering to see if they try to make a run at this gap off of that NFP number. If that comes in cold, which it should based on the data we've had lately, you could see maybe bears making a run at this gap. I'm not so sure what happens here. I mean, obviously it's an obvious gap, so a lot of the times they don't fill right away. But crude's hanging in there. If this consolidates, it can go higher. But again, there is just a big gap there, and that's a weekly, daily, monthly, quarterly gap on crude there, so just be aware of that. It's very rare that you just will put in a low without that filling there on crude futures. XLE coming in very nicely. We talked about that 100 moving average yesterday. Nice outside day down 1.76% on the day. The XOP down 2 1/3. So again, basically testing that 130 area. I wouldn't do anything with these. I love this trend line hit though. Beautiful back test of that trend line. And nice outside candle down. OIH engulfing reversal there, down 3.2%. Finding support at that 280 level. So again, that's been a good pivot point here for quite a while. But nice little dump there on the OIH. Nat gas basically flat here. I still like this weekly setup. So we'll see if this can get going next week. But basically just in a range so far this week. Dollar index, again, another doji candle. I'm not sure what the heck is going on here with all these dojis. It's just very strange here to see the dollar index do that this many days in a row. I'm not sure what to make out of it. I do know that you have a nice bear pattern there. Down move, sideways action. A little bit of a flush here and closing near the lows of the day. Again, the jobs data pushing the dollar lower. This does want to get to double bottom, so we'll be watching for that. Conversely, gold having a big day again at 52-week highs. 2039 continuing to power up, and we are at, so we're about 40 or 50 points away here from the all-time high on gold. Everybody's out in full force and celebrating here. It's a powerhouse move in gold. I just don't think anybody should be chasing it up here, and there's many reasons for that. Right now, there's a lot of rhetoric about the dollar being over with, the dollar's demise. I'm not buying that, at least not right now. Gold is up very nicely off of that. It's also up off of banking fears. I've said it ad nauseum, but GDX, it's finally through the highs here. So we'll give it that for now. But again, you're still way off of 52-week highs. And you're still way off of anything close to an all-time high. Not that it needs to be in an all-time high, but it's relatively underperforming here. Lastly, if you believe that we're going to have a credit crunch and we're going to have a massive deflation period, then you believe that equities are going to sell off very sharply. Just go back and look at how gold performs during any sort of panic sell. It always has a flash crash. So I would not advise chasing it up here. I know everybody wants to be in it right now. Everybody's happy that it's surging finally. I just don't think it's something you'd want to chase up here. You'll get a chance to buy it on a washout, and it just historically that's what happens. So just go back and look at 2020, look at any other time like that. That's typically how things work. But for right now, I'll respect the strength. It's holding up well. Again, we got a quarterly all-time closing high. So that is significant to me. Silver, just powerhouse move. Again, these always tend to overshoot, right? Getting through these pivots there. And that's had a nice move. This still is into a lot of resistance here, though. So I'm not sure what it wants to do here. I just know that it's very stretched in the near term. I mean, that's a 20% move here in the last couple of weeks on silver, but it's had a great run. We'll respect that as well. Platinum, nice pop there, so up 3.5. And saying that for the last couple of weeks, if this firms up, which it did, you can make a run at 1040. So that's about where I see it going here in the near term. There's some significant resistance there with that pivot and this red bar above that. So right in this area, we'll just put it at this red bar there. So about 1043, that's where you're going to see some resistance on platinum, but a nice move. I'm going to try and get that in there exactly. There we go. So, but a nice move there on platinum, beautiful inside bar, tested the lows a couple of times and then popped higher. So nice move there for PL. And then copper here also continuing to kind of confirm this weak data. That is now a failed bull flag there on copper. So 420 is no longer on the table. 390 is your near-term support. Then, of course, you have that pivot low. After that, you know where it's going, 375. That is still my target there on copper. Lastly, Bitcoin hanging in there okay. Nothing really too new to add to it. Again, still looking for 30,000 there. Just kind of stuck in a range for the time being. All right, lastly, back over to the spiders here. So let's take a look where we closed. So yeah, getting a little pop, little gamma unwind, 0DT, gamma unwind into the close. Again, you know, a lot of bears kind of celebrated this morning. I was never in that camp. 63 million shares on the spiders is really just, it's something to not even worry about. If you're going to get a serious sell-off, you need to have probably double that. And right now it just looks like backing and filling to me. I think this market can put in a lower high and it can push up, possibly even to test the February highs. But if things change, of course, I will let you know. Anyways, guys, can wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.